the differences between the RBI and the centre have now perhaps reached a boiling point, but it underscores a long history of disagreements that we know of. How do you see this impact the country's image if there is a resignation impending, and what would the consequences be for the markets?
Well, I really don't want to speculate on rumors, but, clearly the reality is that we have seen in the U.S. itself President Trump be extremely vocal about his disagreement with the direction taken by the U.S. Fed. So it's not surprising that governments around the world, and I guess India is no exception, where the governments and central bankers are not seeing eye to eye as the liquidity flood that has propped up economies and made people feel good. As that liquidity is ebbing, politicians are looking for people to blame, and central bankers have become, I guess, a popular whipping boy in many countries. Turkey is obviously another example. I hope, and my expectation and hope is that India will not join that club and do anything dramatic. But I guess we'll find out. I certainly am hopeful that good sense will prevail on all sides, and there will be nothing untoward.
Okay. Well, just because of this speculation, do you think? Let us assume this era, this mood of uncertainty continues for a day or two. Do you think people will take decisions in haste in that space?
I would think not. I mean, we certainly are not going to start trading on rumors. Clearly, the deputy governor's speech on Friday did lay out in stark terms some of the disagreements between the government and the RBI. But, we've had periods of tension before of RBI governors not being very popular in the finance ministry or the prime minister's office. So those episodes have come and gone, but we have not seen any fallout that is as severe as what you're suggesting may be coming. So I'm hopeful that this disagreement too will be resolved with some mutual give and take. Okay,
we hope that plays out as well. Paul Kitney joins in too. He's a chief equity strategist of Daiwa Capital. Paul, would you base your investment rationale on the eventuality of this this story?
Right. So, good morning. I think what the previous speaker said makes a lot of sense to me. I think, first of all, I agree that at the moment it's just a rumor and speculation. So one would not want to make any particular investment decisions based on this. But let's think about the hypothetical here. So if we look at central banks, the reason why there is central bank independence or central bank independence that's been set up globally is to divorce the central bank decision-making and their primary mandates, which are focused on dealing with inflation and inflation targeting, are not linked at all with political decisions. And so, as a result, we've sort of generally seen central banks, both in emerging markets, with some exceptions, and also in developed markets, sort of act, rather prudently in that particular fashion. Now, when inflation targeting is put to the side, then there is the prospect there of overheating economies. Now, in the case of India, I don't really see that as being a major problem. So I don't see inflation actually near term as being a big problem, primarily because of the fact that there is weakish agricultural prices, and also the fact that the central bank's policy rate, the RBI's policy rate at 6.25%, 6.5%, is still well above the inflation rate, which has been ticking down, and as of September was below 4%. So we've got a real positive policy rate there, which is cramping demand or holding that down. Now, having said that, if there was, and frankly, I think the RBI is doing a good job. So if there was, let's say, an easier monetary policy imposed in India at this particular point in time, then that sanguine outlook for inflation may well be altered, and that might affect the currency as well as inflation going forward. But again, one wouldn't want to speculate on that.
Sure. Let's not speculate on that. Arvind, good morning. Your thoughts on market, because we've seen some kind of bottom formation, not just for our market, but for the rest of the emerging market as well. And over the last few days, there's been quite a bit of outperformance from the broader market as well. Do you reckon the worst of the price damage might be out of the way?
Well, it certainly looks like global markets are oversold. There's been such a sharp correction so quickly that we are getting some rebound from that. I think the real question becomes one of how much of the sell-off was sentiment-driven, and how much of it could be driven by fundamental concerns. And if it's sentiment-driven, then the rebound has legs. If there are fundamental concerns, then the rebound itself could be a dead cat bounce. So I think we're more in the camp that global growth is still relatively intact. There's going to be change in leadership to some extent as we get later into a cycle and as we get further into the Fed interest rate cycle, and the implications of easy liquidity going away are negative for some sectors. But I don't think the economic growth or the earnings growth cycle is coming to an end. So our expectation is that this will be a choppy rebound, but at least in the short term, the worst may be behind us. But, I think in India's case, we're a little bit more nervous about the implications of the liquidity tightening in terms of the economic growth outlook and therefore the earnings outlook going forward.
Okay, Paul, assuming that the government and the RBI showdown doesn't result in any major accident of anyone quitting, and that it is, comes close to a showdown but doesn't result in anything bad, what would your approach be to the Indian markets now? Are there sectors that are looking attractive after the fall? Do you think 10,000 is bad enough and the Nifty won't dip much below?
Right, so we haven't changed our view, and we're not going to change our view, based on this type of issue. So we've been overweight India all year. We actually increased our weighting in India, in Asia ex-Japan, in mid-year to be our largest overweight in the region. And the main reasons behind that, as I mentioned before, is that the inflation environment actually, despite the higher oil prices, and the weak rupee, is actually fairly benign due to positive real policy rates and also weak agricultural prices. So we also think that the RBI is doing a good job in terms of its focus on monetary policy. We see earnings growth in India being at near sort of the top of our sort of group of countries that we follow. Valuations are trading at a bit of a premium at around 15 times earnings, but we think that the fact that the Indian growth profile, not being geared to the trade cycle, deserves a significant premium. Now, the sectors that we like are industrials. We also like consumer discretionary, and selectively in some of the higher quality financials.
Okay, so industrials and consumer discretionaries. Arvind, I wanted to ask you your views on corporate banks, because we've seen an improvement as far as earnings are concerned. Names like ICICI Bank, Bank of Baroda reported such a big drop in slippages. Do you think this space has turned around?
Well, it clearly looks like that the NBFC's loss is going to be the bank's gain. And in addition to that, that would be for, mostly the private sector banks, maybe a few better run public sector banks. But on the other hand, the other thing also to keep in mind is that the worst of the big NPAs is behind us, and we're seeing some pretty decent resolution out of NCLT in those cases. So I think that there are many reasons why the corporate banks and certainly the ICICIs and the Axis are benefiting. And, you also have dislocation among some private sector banks like Yes Bank, which are, again, leaving a few people standing. And therefore, I think that does create more of a cyclical opportunity and a secular opportunity for, certainly for an ICICI Bank and maybe even some of the PSU banks like Bank of Baroda or State Bank, which are some of the better run public sector banks.
Okay, now before I let both of you go, just tell us how you would react if the news were right. If it comes to the resignation of the governor, Arvind, what would your reaction be?
Well, I prefer not to speculate, but I certainly can't imagine it would be positive.
Okay. Paul, if you were to get such a news at all?
So should that event take place, it would be considered a negative factor in our valuation matrix.